So my name's Chris Allen. I'm with Strong Towns. I'm going to be doing a short talk today while everybody grabs their food and gets seated, and then we can get on to the main event where we're going to be discussing the rest of those bills that you heard about this morning. So my name's Chris Allen. I'm the Director of Events and Partnerships at Strong Towns, and I'm going to be talking a little bit about our work, who Strong Towns is, and then some of the stuff we've seen as we've helped communities all over North America address the housing crisis. So, for those of you who don't know, what is Strong Towns? At Strong Towns, we seek to replace America's post-war pattern of development, which we call the suburban experiment, with a pattern of development that is financially strong and resilient. And to do that, we advocate for cities of all sizes to be safe, livable, and inviting for all people. We work to elevate local government to be the highest level of collaboration for people working together in a place. And this third point is one that it always finds itself kind of at the end of our mission statement or at the end of what we're working on. And as I'm sure all of you can feel right now, as the funding sources for communities change, this is becoming incredibly, incredibly important. We're seeing federal dollars dry up in the middle of program deployments, and the work that cities do, communities do, the towns do, is becoming even more important. And if you think that your community does not have the relics of the post-war pattern of development because everything that happened in your community happened before the end of World War II, I can assure you, you are wrong. So at Strong Towns, we have 5 core campaigns. This is what we spend most of our time and brainpower working on, and I'm going to spend most of our conversation today talking about the bottom 3. But from top to bottom, they are end highway expansion. We heard about it today in the last session. We've got enough highway miles. We don't need any more. Transparent local accounting. Local finances should not be so difficult that elected officials and city staff don't know what the hell's going on, and everyone in the community should be able to. We believe that you should have incremental housing by right in all municipalities. We believe that you should be able to build the next increment of housing without an 18-month process to get approvals. We should have safe and productive streets. Oftentimes at Strong Towns, we get lumped in with the anti-car movement. We are adamantly not anti-car. We are aggressively pro-person. And we believe that all people have access and right to public spaces regardless of if they're in a car or not. And this is not a moralized stance. We've got the math to prove it. These are the most financially productive places in your community, where cars, people, different multimodal transportation, bikes, everyone can share the public space. That is where you're going to have your most productive parts of your community. And the most unequivocal one is ending parking mandates and subsidies. This is not negotiable. We don't have a parking crisis, people. We have a housing crisis. Let's act like it. That was backwards, not forwards. So how do we do this here at Strong Towns? We have articles, podcasts. We also have local conversations and membership. We have 10,000 members across North America, and we have almost 2,000 local conversations that are groups of people, Strong Towns advocates, believing these 5 core principles, getting together in communities. Our articles, we have about 5 million annual visitors to our website. By self-reporting, people who raised their hand and said, yes, this is me, we've got about 20% of municipal staff all the way across North America reading our articles and listening to our podcasts. And we also do coaching for cities and technical staff. So that's a quick overview of who Strong Towns is and what we do. So I'm going to talk about the housing crisis. So are we in a housing crisis? Yes, we are. Some people say, no, we are definitely also yes in a housing crisis. Everyone agrees we have a housing crisis. This is where the conversation starts to deviate. To solve the housing crisis, what direction do housing prices need to go? Up and down. 43% of Americans say to solve the housing crisis, housing prices need to go up. 41% of Americans think that housing prices need to go down to solve the housing crisis. We believe that this is at the crux of the issue. This is the actual problem we are dealing with, is that we're having 2 completely and totally separate conversations about housing in this country. The first is that housing is a basic human right that all of us have not the privilege to, but the right to. That to live with dignity and have access, not just to affordable, but attainable housing is a basic human right. We also have an entire financial market that is built upon housing prices going up at all costs in all ways. This is why we have the structures that we have, this is why we have the banking industry we have, and this is why we have the subsidies that we have. You can feel the tension in your community. It might not be this transparent, but you can feel it. Instead of creating actually affordable housing, we try and subsidize our way out of an affordability crisis. All those subsidies do is draw the top end of the housing market up because no one is incentivized to decrease costs to increase occupancy. We have federal policy that says that housing prices must fall, and then we have federal policy that says housing prices cannot be allowed to fall because the market is built entirely on this. You can feel the tension here. If you'll forgive me, I'd like to take us back to the 1930s and the Great Depression. In this period of great economic growth that then stalls, we all understand, I'm not going to make you, I normally make everyone sit through a financial history lesson of where we got for the Great Depression, but I thought we've got more important local stuff to talk about than me giving a history lesson. But what happened is that in the Great Depression in the 30s, before FDR stepped in, over half of mortgages in the United States failed. So 50% of mortgages, and this was even more acute in rural areas. What was happening at the time is that you could at most finance half of the cost of the mortgage, and it was a 5-year note. And you had to have a full balloon payment at the end, and you would keep refinancing, and over time it would go down, you would pay down the debt. When this deflationary debt spiral happened and everyone started defaulting on the notes because of the Great Depression, as the properties became reassessed for the refinance, the property becomes so devalued because of the deflationary spiral that people would have to show up at closing with $50,000, $100,000, and it was impossible. And so we have this horrible rash of foreclosures. So to respond to that, FDR deploys the New Deal housing initiatives. Government purchase of mortgages in default, refinancing over 20 years instead of 5 years with lower interest rates, and the payment then became principal and interest instead of just interest. Then they created a secondary market for 30-year mortgages, which we know today is Fannie Mae, and they lowered down payments from 50% to 20%, and then the federal government provided PMI to cover that gulf. This was incredibly successful, as we all know. The New Deal in this part and in several of its others, but in this one specifically that we're talking about today, it stopped the housing crisis overnight. They fixed it. It was an amazing tool. They got all these tools in the tool belt for how they could fix the housing crisis in the continent, and it was incredibly successful. We know what continued to pull us out of the Great Depression was World War II. So, this was Paul Samuelson, Nobel Prize-winning Harvard economist, and was most important financial advisor to the president at the time. And he said, were the war to end suddenly, there would be ushered in the greatest period of unemployment and industrial dislocation which any economy has ever faced. So faced with this reality, the federal government says, okay, what are we going to do? They reach in their toolbox, and they find the tools that they found to bring us out of the housing crisis. Those tools were then used to build this all over our country. We incentivize it with rules and regulations, and even if you don't have this problem in your community, the financing structure and the regulatory environment that produced this is there. Even if you are not dealing with overwrought suburban sprawl, this is what banks are built to finance, and this is what zoning codes and regulations are meant to enforce. To that end, we have federal policy that makes it easier for more people to borrow more money to pay more for housing. This is how we've artificially propped up this entire system. I think you can all see the problem here. More people, so that we have more housing starts and more housing purchases, can borrow more money to pay more overall for their housing. This isn't just a good idea. This is what is federally regulated. This is what our banking system is built on, and this is what all the subsidies that we have in place are for. And guess what, guys? This has been wildly successful. GDP over time grown exponentially. I'm sure we can all feel that. We understand the bumps and bruises along the way. But to do this, public debt has stayed almost flat, barely risen at all. Debt to GDP plummeted. And why? Because private mortgage debt has increased 1,000%. The federal government took this growth engine it had, took it off of the federal debt and put it on everyone around us so they could sell more money, so banks could make more money, so we could buy housing that the federal government was subsidizing. These are financial products. These are not homes for people. These are financial instruments to increase the GDP of our economy. Suburban sprawl tract developments in 5/1s. Do not fall victim to a conversation where we fight amongst each other about what's good housing, what's not good housing. These products are not for the people who occupy them. These products are because the large banks have financial instruments that they can automatically approve these products with builders, and they can send them out the door, bundle those loans, and then sell them on the secondary market so they can reappropriate that money in the bank. And the federal government loves it because they can hold these, and as long as the GDP slowly starts to creep up, everybody gets paid. But as I'm sure everyone in this room remembers, that's not always the case. The people are no longer the product that's being sold. It's the mortgage. The problem here is that we're making it easier for more people to borrow more money to pay more for housing, and it's not the answer. We keep talking about subsidies and programs to produce affordable housing instead of trying to make housing more affordable. And I think we're all here this week to talk about what we can do to make housing more accessible and more affordable, and continued federal subsidies to drive up the cost of housing is not the answer. Even if we get more units deployed that way, we are increasing the overall cost of housing. So, what have we learned? To escape the housing trap, we have 3 things that we've learned in our work. You need to see immediate code reform, you need a swarm of incremental developers, and you need to relocalize finance. This is the answer. So, code reform. You need to allow accessory apartment delineations. This is allowing grandma to legally rent out that extra capacity in her house. It's, there's an Airbnb model here, but I think Uber is the right example. In most places, it's illegal to cut a door in the side of the house and let this be rented out. Fix that tomorrow. That's a thing we have to do immediately. We have, as we heard several of the speakers talk about this morning, we have house size mismatches. This is a way we can start to, in the market, allow houses to start being right-sized for occupancy by allowing people who might be struggling to make ends meet on the housing payment receive some supplementary income. Next is backyard cottages. Please don't call them ADUs. ADUs sounds like a medical procedure you have done after your knee gets injured playing soccer. So backyard cottages, these are granny flats. These are places normal people live. These aren't scary, they're not bad, and I promise they won't ruin your parking. If anyone says they'll ruin your parking, they're a liar. Starter houses, or as we used to call them, houses. Stop requiring lot minimums, stop requiring square foot minimums. It's not that people don't want to build these houses, we've made it illegal and unfinanceable in most municipalities. If you walk through the majority of any downtown in North America, you're going to see the most expensive neighborhood in town have home frontages that look exactly like this. Because you could build this, and it was legal, and the lot size made sense. And you had another kid, or you got married, or your son went off to college and came back and started a family, you could add on a room. You could add on 2 rooms. You could add on a sun porch. You could add on a second story. And those were all things that we allowed to happen. What's horrible mismatch in housing now is no one can afford the housing. Well, as several of the speakers this morning talked about, we've made it illegal to build the housing people need that they can afford. So fix that. Don't do that anymore. We have a toolkit we've produced. There's 6 policies every city needs to be housing ready. You can go to strongtowns.org/housing ready. Don't worry about writing that down. If you want to, go for it. I'll give you my card after and I can email it to you. Rule 1, allow single family home conversion to duplex or triplex by right. The house is already there. Stop being persnickety about what we do with it. Policy 2, permit backyard cottages in all residential zones by right. Policy 3, legalize starter homes in all residential zones. This is a thing we talk about a lot, and we see in a lot of markets. Developers get a really, really bad reputation, and I know it doesn't have the same connotation in this room because we're all thinking about this carefully. Developers, like banks, need projects to pencil. Very few developers are coming to the table with a moral stance on what they build. They bought a piece of dirt, they got to make the pro forma work. If we let lot sizes be smaller, they can produce more houses and the pro forma can come out the same and they can get more units deployed more quickly and have a significantly more useful product for the market. So let them. Eliminate minimum lot size requirements in existing neighborhoods. We saw a slide from Allie earlier today about lot sizes. Lot sizes have to go down. This is one of the things that we need to do immediately. There's no conversation here. Policy number 5, repeal parking mandates for housing. This is not negotiable. Again, I will beat this drum until they stop letting me talk. We do not have a car parking crisis, we have a housing crisis. And as long as we continue to think that we should be using the only limited asset your community has, which is its land, to park cars instead of house people, we're going to get the exact same results we're getting now. And policy number 6, streamline the approval process. We've worked with communities where they've gotten building permits down to 2 days. I know that sounds insane, and people throw things at me and yell at me and, write angry emails to the editor about it. But maybe you can't get it down to 2 days, but we've had very, very large municipalities get their approval process down significantly. It should not take months to get processes approved. Our next step, incremental developers. These are the people who are going to make your community thrive and flourish. We deal with a lot of places that, it might feel differently here, but a lot of places dealing with gentrification have this concern that allowing any kind of development is going to be the bad guys coming to town and doing extractive work. The one way to ensure that you have people caring about your community doing the development is to let people in your community do it. And that means sometimes they need support. I mean, sometimes they need help getting that introduction to the bank or understanding the permit process. And it's on us as community members and decision makers and stakeholders to ensure that there's an ecosystem around these developers to do that. So who's an incremental developer? All of us can be incremental developers. Someone wanting to rent out a room, someone wanting to throw in a backyard ADU, someone wanting to throw in a Home Depot shed on the corner of an abandoned lot and sell coffee out of the front can be an incremental developer. We work with groups like the Incremental Development Alliance to do trainings, and there's lots of others too that you're gonna meet this week who are going to do developer ecosystem training, and we're here to support those people. Last but not least, localized finance. You've got to get actual people in your communities caring about this. The way products get financed now is not through your local banker caring about it. It is through a spreadsheet from Quicken Loans saying yes or no, auto approve, auto decline. We've got to encourage local finance. Bankers in your community are going to be able to look at projects and understand what needs to happen. They're also going to be able to understand the unique dynamics and how they can deploy capital in unique, creative ways. So maybe they've never financed an ADU before. A local banker is going to be able to sit down with you and walk through that process. An example that we've seen in Oswego, New York is microgrants. They had, I think, it was Recovery Act funds that a few $100,000 left, and they're like, what can we do with this? So in Oswego, they started a program where if everybody on a city block agreed to do something to beautify their property, they could each get between $5,000 and $15,000. So the city deployed all these funds, and over time, they saw increases 2 and 3 times as much as the city had spent in increased property values. And another leading indicator of success here is that they saw time on market of new housing sales go down 50% in areas that had received microgrants. Simply putting in flowers and a new coat of paint actually made a difference. In Muskegon, Michigan, we saw tax increment financing, a tool that's normally used for commercial projects or larger scale projects used on individual lots so that they could decrease the initial construction cost with future assumed tax revenues and produce naturally affordable housing that the city bared the entire burden for. In California, they're doing cottage financing at scale. You can get one of these like you would buy a car from Carvana. You go online, you can get a financing approved, you can flat back ship it to your backyard. And the state is subsidizing and supporting that. In Florida, municipalities are actually co-signing loans. The city is walking in and signing on the line with the builder and the occupier. They just decided to do it, and guess what? They did it. We've also seen local philanthropy step in and address some of these missing component pieces. One of the things we've found in a lot of our work is that construction financing is actually the hairy problem that a lot of places are dealing with. In most instances, you're gonna have to show up with about 20% of value over time, but capital is only gonna need to be deployed for 6 to 18 months on a project. And if the city can step in or philanthropy can step in and cover that construction gap, then once the units are occupied, the bank will finance it completely traditionally. It's super easy to get those once you've got that building occupied. And so that the city or the philanthropic group can get their capital back really, really quickly. Instead of leaving it in the home to try and keep it affordable over time, we can have naturally occurring affordable construction this way. So we've got a book out recently about this called Escaping the Housing Trap, which Chuck and our team wrote. And we've also got some other books that are about addressing the infrastructure crises and the problems we have in our community. So there's my name and our handles and our website. If you've got any more questions, we are going to pause here and do a quick Q&A before we move on to the fun stuff, We'll give everybody an opportunity to grill me about all the insane stuff I said. So, if anybody has any questions, Ivy's gonna do some mic running, and we will answer those, and then I'll stop talking and let you guys finish eating or move on to more fun things. Oh, this is great, guys, good work. Yep, we got one here in the front.
I've heard that Strong Towns has a finance decoder. Is that something you're going to talk about?
Yes, we recently released a tool called the Finance Decoder, thank you. It allows you to take the city's audited financials and put it into our website, and then effectively get a visualization of debt to income over time. And so a thing that no one says out loud about a lot of municipal finance is that several of your actual long-term liabilities are calculated as assets for the city, your road and pipes being one of them. So when a city says we have a balanced budget, what they're doing is they're weighting those assets against the debts, and in most cases, the hard assets your city is counting are things like roads and curb and gutter and sewer pipes and fire trucks. And so that shows up in debt service payments, and we've produced a tool, thank you for bringing that up, that allows people to go and visualize that, because all that information is almost always buried in city budgets because they don't want to talk about that out loud. Anybody else?
Yep, we got one right
Sir.
here.
Can we talk about the non-negotiable?
Can we what?
Talk about the non-negotiable,
What's that?
the parking.
Yeah, let's talk about it.
So without the mandate, do people just intuitively get it right? And what happens when the spots fill up? So can you just talk about what led to the non-negotiable of kind of, I don't know if it's hoping that it gets right or getting right without guidance?
The thing that we have seen practically play on the market first is that the guidance numbers are so far off as to be like problematically unproductive for cities. And we'll give an example. We worked, not Strong Towns, but a different friend of ours, worked with a very, very large real estate developer in Dallas that was being required to effectively, across unit types, build 3 parking spots per apartment. And they did their own independent study. And this is not one of the good guys, right? This is not an organization we would say was doing good work. And they showed with their own data set over time, over several years, that they needed 0.75 parking spots per apartment unit, regardless of room size. And that's just an example, right? And that's a place like Dallas that's pretty land rich for a while. And so like that 3-to-1 ratio, we end up actually seeing be the case most of the time. And no one take this too harshly, but this is a place where the market right sizes itself. Over time, people will find the spaces they need to use, and then if a business can't get parked appropriately, then the business won't succeed. And there's another conversation to be had about transit, and like that's a much harder conversation. But we have not run into anyone that actually had to close their business or was having a problem with the downtown. There's a lot of people that say they have a parking problem, and then the downtown's full and the businesses are thriving. And so we think this is actually a place where the market will right-size the solution when given the opportunity. And we think our position is that we've got to try something, because all of these parking mandates are taking the most buildable land in our communities that is not only the highest tax value land for the community to increase roles, but the highest utility land for housing developments.
Right here.
So my question's about, you talked about how like federal housing policy and our financial system is sort of geared towards these like sprawl and 5/1s that are more financial vehicles than housing. I can see how the changes that we're talking about here would produce more affordable housing, but in a way they sort of feel like smaller more affordable financial vehicles. Is there, which I think is like pragmatic and makes a lot of sense, but if you had your druthers, are there bigger fundamental changes that you would make sort of in addition to what you talked about at the end of the presentation?
For sure, that's a great question. I'm going to answer this question not as a Strong Towns employee, as a person who, and thank you for the question, Tom, but as a person who, for a lot of reasons is closer to this, like a lot of us are, than normal folk. This is a tension in the new urbanist conversation, right? Like, is infill enough? Is this going to be enough to solve the problem? And I think there's a lot of really thoughtful people asking that question. My supposition, a hypothesis which I would bring to the table is that the federal government is effectively mindlessly continuing these policies, as well as the financial markets, right? Like, in my experience, financial markets are amoral. They're not immoral, they're amoral. They have to make their return, they gotta hit their numbers. And so they understand how to do that with a known product, right? And it's like they understand, hey, if we build this thing, we hit our numbers this quarter, everybody high fives, we get our bonus, we can go to Bermuda for the weekend, it's fine. And this is where I think that some of the places that are considering greenfield T&D development are actually seeing interesting work. And we saw, I think it was Seaside earlier today, in the parking conversation, where we took some of these kind of urbanist infill principles and they were applied at scale. And that's, produced some very positive outcomes. Yeah, the prices are high, but guess what? That's because it's desirable. That's what a market does. When people want something, the cost of it goes up. And so I do think there are some of, the people in this conversation who are starting to do the kinds of things we think build resilient communities, and they're starting to do them at scale, right? We're starting to see infill projects that aren't 10 units, that are 50 units, 100 units. And places that would have, probably gotten a top 10 tract home builder in the country are now starting to think about, hey, how can we work with some of these people who are a little closer to CNU or a little closer to NTBA, kind of in their leanings. And so I think that's an interesting place, because I think I would hypothesize that as soon as we can show larger financial institutions that this works at scale, I think they're going to finance it, because they don't actually care, right? Like, the loan officer at Bank of America doesn't have a moral position that a 3 and 2 is the right way to build a country, right? Like, they don't care. They just know that that's a product they can get approved so that they can hit their numbers. And so I think as we start to see some more of these successful, and it's a thing people are talking about more. There's tiny home villages were on the cover of the Times like 6 months ago. Like, we're having conversations about this at scale we just weren't having before. And so I think upzoning these, upscaling these a little bit, I think is hopefully the right answer. And we've started to have a lot more conversations of what doing thoughtful greenfield development in a more dense pattern be really successful. So I'm hopeful that continues. Anybody else?
Yes. Do you know any of the mechanics of the Florida example that you had about the municipality co-signing the loans? Like, how does that work?
So effectively, they set aside an amount of money and then a risk amortization chart, right? Where they said, okay, we think this many might default over time. So they set aside the funds and they're effectively held in escrow, and then the city walks in the room and signs it. And so then the city gets to use their weight effectively to co-sign for people who might be on the edge of home ownership, and it's going fine. No one has died, more houses are occupied, and things are going really well. I'd have to go look, I honestly don't remember. But I will find that for you. Anybody who wants to know, I will find it. We had enough? Yeah, okay, well, let's wrap up. Everyone, thank you so much for your time and patience. I really appreciate it. The one thing I want to say before we go, this is really hard work, and not everyone has the answers, and the only way we can do it is by working together and figuring them out. So first of all, thank you to everyone who organized the conference and put this on, and the sponsors, and thank all of you for being here and being willing to do the hard work. The thing that your community needs most is you guys all caring and trying, so thank you.